Capital gains which an individual realizes from the sale of shares, bonds, and investment fund shares are taxed with personal income tax, but this applies only to those securities and shares which were initially acquired starting from January 1st, 2023. However, if the owner holds the securities and shares for a period longer than 2 years, they will not pay tax on the realized capital gain. Capital gain represents the positive difference between the higher sale price and the lower purchase price. The prescribed tax rate for calculating the tax is 10%, which, due to the prescribed tax relief, is applied to 90% of the determined capital gain, so consequently the effective tax rate is 9%. The tax on capital gains for transactions in the country is determined by the Public Revenue Office on an annual basis with a decision no later than February 15th of the current year for the previous year. The individual who realizes the capital gain should pay the tax within 15 days from the date of delivery of the decision by the Public Revenue Office. Those individuals who made capital gains from abroad based on the sale of foreign securities and shares in funds are obliged to submit an electronic calculation form to the Public Revenue Office by the 10th of the month following the month in which the profit was made. Individuals should attach all the documents related to the purchase and sale of foreign securities and shares to the electronic calculation form. After the approval of the calculation by the Public Revenue Office, the individuals are obliged to pay the tax no later than the 15th of the month for the previous month.